So hello and welcome everyone. Welcome to our 9-month live stream. This is again a big milestone. We have completed 3 quarters with our PMS. 18th of August is when we started, and today is 19th of May. So we are 9 months old. And before we start our live stream, I'll also introduce a new team member of ours. Shivam is here. Shivam has joined us in a sales and distribution role for the Wright PMS. And Shivam, you'll introduce yourself for a couple of minutes.
Hi, good morning, everyone. Happy to see all of you all on a Sunday morning. And if I have to talk about my background, I have 5 years of experience in public and private market. I am basically from a science background. I have completed my BSc in chemistry, but then I always had a knack for stock markets. Then I pursued my MBA in finance, and here I am with stock markets and public market right now. And I'll be more than happy to listen to you guys and what exactly is the thought process that you are coming up with. Now, without a further ado, I hand over the call to Sonam. Sonam, if you may please
No,
begin with
definitely.
your sort of conversation.
No, definitely. And I think many people have already spoken to you on the sales calls, right? So
Yes,
great
yes,
to get you introduced to the wider audience as well. Perfect.
right.
So, like every month, we are going to start with a quick presentation, right? Where we'll talk about what's happening in the PMS, the performance, and our outlook. And then we will go over to the Q&A portion. We already have many questions in place in the form that we floated, but please do post it any other questions you guys might have. We'll be very happy to pick up after the presentation, right? Perfect. So, so I'll start off by talking about the key milestones about the PMS in this last 1 month. So, like I said, we have completed 9 months, and the performance has been, exceptional for all of our schemes during these 9 months. Our flagship factor fund has touched 62% returns during these 9 months. We have also been able to scale up our AUM to 150 crores, which is a big milestone. I think we completed 100 crores in February. So May, in 3 months, we have again crossed good milestone of 150 crores. Right now, I think we are seeing a good bounce back in April and May in our performance. But still, we are a little bit cautious with the exposure right now. We have large and mid cap exposure. Also, across our schemes, many of our investors are aware. We've put out a very small hedge. So, we've not taken a massive exposure in terms of the capital that we have deployed. We have deployed very small of capital, but we've hedged our strategies in preparation for any volatility. And this should not have any major impact on the performance. If the market stays upbeat again in terms of performance, I think what's really good is in these 9 months we've done well across scenarios. In a bullish market, in a volatile market, the performance has been very strong. And in terms of our focus, the focus has been on momentum and quality in the current market, right? So that is what we see being the focus area for our strategies. So I will take you guys through our three schemes. As many must be aware that we have three schemes: our factor strategy, momentum strategy, and alpha strategy. Uh, and See, the factor strategy is a combination of multiple factors in the market. What that means is we'll combine momentum with quality, with growth, with value, etc., to create with something that can be dynamic across market scenarios. In our momentum strategy, we only take exposure to momentum, around 20 stocks, highly diversified basket of momentum stocks. And in alpha, we have a high risk momentum, so only 10 stocks, so high risk, high return in that sense. You will see that factor definitely has done really well. And alpha, which had corrected a little bit in February and March, being a high risk strategy, has now come back exceptionally well during the last 2 months. So May, I think, is proving to be very good for the alpha strategy. So starting with our factor strategy, you will see, we've been doing better than the benchmarks in most of the months. The strategy is touching close to 62% returns. like I said, has done well in a good market and in a sideways market also. And we see a lot of people interested in this strategy. Again, like I said, while initially the plan was to only hedge one or two strategies, right now we are hedging any of our strategies depending on the client's consent. So if the client consent, we will be hedging this strategy also if needed, right? Now our second strategy, the momentum strategy, again, it has done quite well in May. You will see in the past week or so, very sharp up move. But yeah, we had a stock called Bank India in this Indian Bank in this portfolio, which corrected after the results. Therefore, there has been some impact. But we're seeing a very strong pullback by this strategy, and we expect it to do quite well as well. Our alpha strategy, like I said, if you look at the performance, it is done more than 7% in May. So it is almost over the drawdown that happened in February and March, and it's making a very strong comeback. So I think people who opted for alpha since the beginning have been a little worried about the strategy in the last couple of months. But like we keep on saying, it's a high risk, high return strategy. So if it corrects, it also bounces back at a sharp rate. So therefore, it has been doing quite strongly in April and May. We expect this performance to continue. Now let's talk about, so these are all the three strategies together. You will see, we've done well across different scenarios. See, in today's presentation, I wanted to address a few questions that we keep on getting from our investors, right? So I think a lot of our investors want to know how exactly do you actually select stock in a quant strategy, right? So that is one question people tell us. Give me an example. How exactly is a stock selected? So, and we keep on telling you that this is a quantitative process, this is a systematic process, right? But it is not as simple as, somebody running a screener or somebody looking at, one Excel sheet, right? It's a very involved process. So I'll talk to you today step by step how it works. See, first thing we do is look at indicators of returns, right? So be it fundamental, be it technical, be it macroeconomic, or in terms of estimates or sentiment, we will be assigning a score to each of the stocks in our universe. So let's say we start 50, 500 stocks, we'll assign the score based on any of these metrics to these stocks, right? So that is the simple part, right? Identifying the factor and assigning a score. But now, if you have been, manually managing your own portfolio or selecting stocks, assigning weights, you would know that there's a lot more thinking that goes into it, right? First is, we want to make sure that we're not taking very high risk in any one stock or any one sector, right? So we will be making sure it's highly diversified. We'll, like we tell in our presentation, that we are managing, we are sort of tactical based on the market scenario. So if the market is good, we take higher risk. If the market is volatile, we take lower risk. So this is what we call regime modeling, right? So if the regime, this is something that we model based on the macroeconomic data. If the regime is favorable, we take more risk. If it's not favorable, we take less risk. So there is that layer. Then diversifying it, taking position in different stocks. How much weight should be assigned to different stocks. We do it using optimization methodology, right? We don't do it as a simple process. So that is another step. And then even after all of this, what you will realize is that this is all data, right? This is all data. So data can move fast because it's price sensitive, but we don't want to change the portfolio very frequently, right? Because otherwise there will be a lot of cost in our strategies. So then there is another layer which looks at minimizing the cost, making sure that the number of trades that happen are not very frequent, right? So we are including cost as a layer in this strategy as well. So combining these three steps, there are multiple processes, and at the end of the day, we get an optimal portfolio. So while selecting this portfolio, we have taken care of, a number of metrics like the fundamentals, technicals, macros, etc. We have looked at risk. We have looked at the overall macro scenario. We have looked at the cost optimization. We have looked at diversification, right? So therefore, the strategy, the stock that comes out is very diversified, right? And I mean, not just diversified, but it has taken care of all the different steps that you as an investor sort of look at. Therefore, we can follow along the strategy exactly as the system comes out with. We obviously do checks because, again, like I said, it is data, and we have to go back and check if everything went right. We have to validate it and all that. So therefore we do one level of checks, but we follow along the system as it goes. So that is broadly the process through which we select stocks. And today, again, in this presentation, I thought we'll do something new. So I've got a couple of examples of the recent stock picks in some of our strategies and how they were selected, right? So see, first thing is, let's say when we are looking at multi-factor, we are trying to understand which factor to invest into, right? So you will see recent performance of these factors if you go and look at it, and this is slightly a week old data, but you will see that we can compare momentum with quality with value, right? And you will see momentum has picked up very strongly in the recent times, but in a 1 month horizon, if you actually look at it, quality, which has more large caps, has done better, right? So in that sense, I would say better. So we sort of try to analyze these factors, see which one is more suitable for the current market, which factor is picking up. This is all done systematically, but underneath the strategy, this is how we study the factors, and then finally, we'll be picking stocks. So I'll give you a few examples of some of the interesting stocks that have been there in our PMS strategies, right? So one stock in our factor fund is Cummins, right, which has done quite well during recent times, right? And so how we will look at this stock is, like I said, again with the lens of data. So you will see, while the stock that which we picked somewhere in February or March, I think, has done really well, right? It has actually given a very good performance. But how was this stock picked, right? So you can look at the rating of that stock across different metrics that we look at. So you will see, obviously, it has very good momentum and it has very good estimates, right? So therefore, the rating across these two factors is very strong. But also, it is a high quality stock. It has a good quality rating. It has low volatility, right? So it is meeting a number of criteria that we are looking at, right? Momentum, quality, volatility. It has very good liquidity also, so no issue in adding this stock to the portfolio. So therefore, this stock was picked up. Now, if you go and actually search for any news flow about the stock, what you would what you would find is that there would be fundamental rationales for this growth as well, right? You would see that various brokerages and various news flow that comes out are rating these stocks upward. You would find a lot of interesting news. So we actually go and validate it because we have to talk about these stocks to our investors as well, right? But selection criteria happens based on the metrics that we look at. Another interesting stock, which is part of our momentum strategy, is Siemens, right? Siemens again has had a very good run, right? Siemens again, why this was picked again, like I said, this is a part of momentum strategy. So we actually just looked at momentum to pick it, but volatility is also an important factor that we monitor, right? It shouldn't be highly volatile because we were trying to minimize the volatility also. And in liquidity also, it is fairly liquid, and you will see recent times Siemens has done exceptionally well, and it is coming up. The earnings came out really well, and it has become a target for various analysts who are forecasting very good numbers for this stock, right? So this is one more stock that we picked, and the selection criteria, like I said, was based on a number of these data points, right? Another stock part of our alpha strategy is one which is Prestige Estate. This is a real estate stock. It was again picked up based on momentum, right? Like you would see, very well rated on momentum, very well rated in terms of estimates, not really bad volatility, so good in terms of volatility, also good quality, and no problems with liquidity, right? So this stock ended up being a part of our alpha strategy based on these criteria, and it has done quite well in the recent times. So this is some of the examples on how we actually go and pick stocks, and you would see these are all very very seasonal stocks which are doing really well. And looking at this lens of data, we are able to pick these stocks that have ended up being very strong in our strategies, right? Now, having covered basics of our stock selection, let's talk about the current macro scenario. I think people are worried about the elections, or excited about the elections, a lot of things going on. But what happens around the elections, I think, I posted something on Twitter, I pasted this here as well, that, VIX levels typically keep on rising. We are still around 17, 18 days away from the results. So till the results, I think there is going to be slightly more up move in the VIX, right? Similar to the last two elections, right? And then as soon as the results come out, we've seen that the VIX cools off, right? And what we've also seen historically in the last three elections is that there is a little bit of a pre-election rally and a post-election rally in the Nifty that happens. Again, it would be typically dependent on the results, but still, see, Indian markets has had jitters before the election and has lagged the global market. So I think as soon as the results come, there is going to be a rally that happens that would support, the Indian market. So we are looking at it in a positive sense. Talking about earnings, I think earnings came out in the last couple of months. They've been really not bad at all, right? You would see that across the whole universe, more stocks have beaten their estimates then missed it. So overall the results have been decent. Banking, finance, automobiles, uh, cement, etc., various sectors have done well in terms of earnings. There are certain misses in the metal sector that might have happened, but still the metal stocks have gone up. So overall the earnings season hasn't been a disappointment. It has been mixed with a positive bias. I think with the IT earning, people are looking at it positively as well, right? Now let's talk about our another important factor that we look at is, which is the rate cut. I think we did a video on rate cut expectations, right, around last month, where we said that whenever the rates are cut, money is going to flow into the equity market, right? So if you look at the expectations of rate cuts, you would see that they have slightly increased over the past week and month, right? So you would see that a month ago there was a higher expectation of no rate cut in September, but now the expectation of rate cut in September has actually gone up, right? That is because the numbers that came out in the US market, right? The inflation was as per their expectations, even though still high, but growth has slowed down, employment has slowed down, which means that the US Fed could step in and cut the rates somewhere in September, right? I think that's a positive. I think that the market has also taken it positively. We are seeing a rally in stocks globally. We are seeing a rally in Bitcoin and all of that, right? Which is a sign of higher rate cut expectation. Even Indian market, which is a little jittery right now in the run up to election, should see a growth uh, as the rate cut expectation becomes higher, right? And elections get over. Now, another interesting thing that is happening right now is a big rally in the metal prices. What you're seeing is, if you look at the charts for copper, you would see copper has touched a high, right? So there's a lot of demand that is coming out of China. There's a lot of demand for electric vehicles, solar panels, wind turbines, which is, the flavor of the next few years, right? So we're seeing a lot of demand for copper because of this, and also because of, some disruptions that have happened due to mine closures or geopolitical issues. There has been a limited supply for copper, and we're seeing that resurgence come in. Copper again is a sign of industrial activity, right? So people look at gold to copper ratio. Whenever copper levels rise more than gold, it is a sign that people are looking at more industrial activity than risk aversion, and that is what is happening right now in terms of commodity prices, which is a very positive sign. I think if the copper demand picks up, it is a sign that industrial activity would keep on rising across the world, and which is a good sign of growth for the market. So again, a very interesting sign that we are seeing. So that is more or less my wrap on the macros. Let's talk about allocation in our strategy. So like we said, we have a large and mid cap exposure. You would see our strategies having a good mix of banking, consumer, automobile, infrastructure, pharma, etc. Right now, you would see momentum strategy also, highly allocated to bank infrastructure, refineries, mostly large and mid caps. Alpha right now has a good exposure to all these interesting sector, real estate, metals, industrials, along with pharma, automobile finance, etc. Right. So I think overall the allocation is, we are very confident of the allocation, even with some volatility or some pressure on the Nifty. Our allocation seems to be doing quite well in the past few weeks, like we said, and we are very confident with the allocation that we have. And like I said, we've done taken a very small amount of 0.1% of the capital has been put in as hedge. That's the maximum loss that can happen with that hedge, but it will protect us from any downside if that happens, right, in the run up to the elections. So that is more or less, I think we have wrapped this up in 20 minutes. Let's go over to the Q&A and see what the audience has to say.
Thank you, Sonam, for those wonderful insights. I have some questions that have, come to me. I'll start with Stavan, sir. He has a couple of questions. I'll ask one by one. The
Mhm.
first question that he's raised: what are the criteria that I should look for when considering a top up in the PMS factor fund? And how
Hmm.
do I determine whether it is time for me to, put SIP or lump sum type of top up in PMS?
Right. So I think, no, thanks a lot, Savan, for this question. I think, see, this is a very good question. See, typically, when do we top up? When we see that there is a correction, right? Short term correction, which is over. So it's a good buying opportunity. Or we are seeing some very good expectation in terms of market returns, right? So that is when we sort of typically do a top up. So we are planning to send out a mailer like this or a notification like this. All our PMS investors, including Stavan, know that we've added you guys all to announcement group on WhatsApp, right? So the idea is that whenever we see that opportunity, that right now is the time to top up, we will be sending across a notification to all our active investors that you guys can top up right now, or if you want to SIP, or if you want to put some more money, this is the right time. Again, another thing I wanted to tell people is that we are going to actually create a flow algorithm, right? So that is something that we are thinking about. So instead of trying to do like a manual call, ki, okay, this is the correction is over or not, we are trying to again create like a data driven flow algorithm which tells us when is the right time to top up. So ideas that I have there is to look at the market breadth, the advanced decline ratio, FII flow, and a few other macro ratios, and basis of that find out when is the right time, when is that correction, when is the investor sentiment at the lowest, and we can top ups to get a bigger upsurge. So we are sort of experimenting with that data right now, and very soon we'll have a flow algorithm based on which we'll give you much more data driven insights on when to sort of allocate, right?
All right, thank you. The second question from the same investor writes: new uh, India manufacturing strategy has given exceptional returns compared to other
Yeah.
strategies. As a PMS client, how can we obtain flavor of such strategies?
No, no, I think you are correct, Savan. Right to India has been one of the best performers, right? Even not just Right New India, but even Right Small Caps on Small Case has been one of the better performing strategies. In the recent times, even Right Titan, if you actually go and look at it, seems to be doing really, really well. Now, see, you would see that various stocks, even in Right New India, or Titan, could have an overlap between our multi-factor strategy or momentum depending on the market scenario. And there are actually in fact a few overlaps, which are there. We do not have a separate scheme. So while these two themes like the New India or Titan, a lot of our PMS investors will come and ask us if you would include more schemes. I think, see, like I said, there is overlap between these schemes and our current schemes. If we add more schemes, that actually confuses the investors. Where should I invest? You have so many options. So I think keeping a limited number of schemes makes sense. But we definitely do have exposure to the stocks in these baskets in our portfolios.
The third question that he's asked: after the Home Minister's statement recently, the market appears to be bullish. So, why the factor fund portfolio is conservative? The small cases of right appears to be more bullish than the PMS factor fund return wise.
Um, I mean, that's a fair thing. That's a fair question. See, we have a little bit of cash sitting in our factor strategy, which we are looking to allocate, right? So maybe in the coming weeks, we would allocate again. The market has risen a little bit, right? So we have to be careful with these levels also. But yeah, we'll be allocating, so you don't have to worry about it.
Sure. And the last, we hedge based on expectations of volatility during the result period. So why
Hmm.
now? Why not at the end of the month when the results are close?
So see, I think that's a very interesting question. See, a couple of things there, Saban. One is the VIX levels, right? Right now, when we bought the hedge, the VIX levels were at 17, 18. I'm pretty sure towards the end of the month, we would be at a much higher VIX level, right? So the buying price that you're getting right now would be better in terms of the VIX levels for sure. Obviously, the market movement. If the market rises, then you would have a delta exposure that would be negative. But see, we are trying to hedge the downside only. So if there is a downside that happens, right, that delta exposure will anyways increase. But we bought it at a lower volatility level, and these are long term put options, right? So we don't have to worry about any theta or anything like that, right?
Thank you. Sami Subramani, he's asking the very same question. Recently, you tried FNO. I think you already covered this in your while giving
Hmm.
presentation, but I'll ask, just reiterate. Recently,
Hmm.
you have tried FNO segment for PMS. Do you expect to continue this, or is this hedging for now?
No, no. So this will not be forever for sure, right? This is just for exceptional circumstances, right? So in our presentation for hedging, what we show is that hedge exposure is taken very rarely, right? It's whenever your VIX levels, let's assume, go above 17%, you would have seen in the last 1 year they have not gone above that level only. Recently there has been a rise in VIX, and we expect VIX to rise for sure. So that is what, when we have taken that exposure, I'm sure as soon as the election results come out, the VIX will cool off, and uh, we will close out our positions in that sense. And see, this would be a very rare thing. Maybe right now, maybe before the US elections, when the volatility rise, or maybe before the rate cuts happen, that a volatility rise. So it is only in exception such situations, right?
Thank you. Mr. Manjunath, he is our existing PMS investor. He's asking, in PMS, why defense and railway stocks are missing. Any plan to add them in future?
No, no, definitely. As per the expectations, those stocks will be added. I think we have had a lot of defense and railways exposure, Manjunath ji, in the previous rally, right before February. I think we reduced that a little bit. Even right now, if you look at it, we do have PSU exposure across our strategies, right? So even Factor Fund has more than 15% PSU exposure. Hedged also has a fair bit of exposure. Alpha also has some PSUs as part of the strategy. So we do have that exposure. Defense, railways, a little bit of it is there. I think we had cut on some of those positions in Feb and March due to volatility, but we'll add it as it goes, right? But yeah, see, we do have a lot of private sector infrastructure stocks. A couple of them I actually came and named, right, from Cummins to even Siemens, right? These are electrical equipment and diesel equipment companies that are in that infrastructure manufacturing segment, which have done quite exceptionally well at a lower volatility, right?
Great, thank you. Uh, Also, a question, though that this is something that you've already cleared. I'm just in case you would like to reiterate on this. What will be the impact of elections uh, in the next few weeks on volatility of the stock markets? Should we
Yeah.
hold capital or deploy now?
No, no, I think there is no reason to hold capital, right? See, I think the markets is going to be strong from what it looks like right now in the run up to the elections, and even post election. See, I think I posted on Twitter about how Indian market right now is actually lagging the US market because of the fear that people have of the jitters before elections. And as soon as the election results come out, we will catch up, right? That is the technical signal that the market gives. We will catch up. So I do expect the markets to be strong, right, until unless some global scenario changes. But so I don't see, and even look at most of the larger investors, nobody's sitting out, everybody's allocated into the market. People expect the market to do well. And even if, there are shocks in the election, right? These would be short-term movements, right? There would be ups and downs, and then, we would get back to normal. But yeah, so we do expect markets to be stable, and if the results are taken positively by the market, then you could see a big rally that you could participate in. So why not be invested, right?
So, a couple of questions on top up very specifically that we're getting.
Hmm.
And Mr. Prabhu as well as Himanshu ji, for top up, we shouldn't we be able to do it at any time, and PMS should give effective returns, I guess, as top up during opportunities.
No, no, for sure. See, for sure that you can top up anytime. Even we take a call where, we don't actually go and invest. If you send us money today, right, and we are seeing a lot of volatility in the market, doesn't mean that we'll put the money in today itself. We also look at the scenario and top up when we see that opportunity. And like I said, we are going to come up with a flow algorithm to come up with a more systematic way. This is the right time to top up. So we're sort of experimenting with that model right now. So as soon as we have that, we'll be sending you more systematic calls, and we'll be putting out some research on that for our PMS customers. So that is something that we will be planning to do soon, right? But yeah, I think, see, like I said, Himanshu, we've added you to that WhatsApp announcement group. We'll whenever we see that opportunity to top up, we'll sort of announce that, if you are looking to top up, this is the right time.
Also, a question from Gautam ji. Next 1 year, are you expecting value or growth investing style? What will work?
See, if you ask me honestly, I think it looks like growth might be a better way, because if we are seeing that resurgence in commodities, copper, which hints at industrial activity, we'll see rate cuts probably in a few months, which will bring in liquidity back to the system. Companies will be able to borrow more and do more, so that will bring in growth. So I expect that to do well, but there is no surety in the stock market. Let's say the inflation rises in the US, or something happens and rate cuts are delayed, some recessionary situation happens, then that could have an impact. But if you ask a higher probability, I would say growth is the higher probability, right?
So those are the questions for today. Uh,
Hmm.
I'd if you could just give your final closing on this call. What exactly do you think about the market, and how do you see what investors should expect in the coming few weeks, and how are we prepared to take this forward?
No, definitely. So yeah, I think that's a right way to wrap this discussion, right? So like I said, the markets continue to be strong, right? There is, obviously, it's become highly unpredictable how the stock markets move within the day right now, right? We are seeing some rapid moves, ups and downs. I think a lot to do with FII flow, a lot to do with people, uh, you know, people's changing expectations, right? People, I think around expiry day, we saw very sharp moves, because probably people took a lot of put, and then they were doing short covering and all that, right? So it's been a little bit volatile, but I think the broader market definitely has a lot of strength, which will continue. But I think if the numbers continue to be strong in the next few weeks before the elections, they will also come up with slightly heightened volatility, right? So I expect VIX levels to definitely be high as the market finds some direction. But yeah, I think post election, when the event is over, is when the volatility would cool off, and we would see Indian markets probably rise up to the global levels again. This is a big scenario. A lot of political analysis could go in there, which we are not equipped to offer you right now. But that's our broader sense. And we, in any case, if there is a bigger risk that happens, we have deployed a hedge, so be very, very assured about the allocations. Even in terms of our allocations, if you look at it across alpha factor, momentum, right? So we saw that actually alpha has done very strong in the last in this month and last month, and but the exposure, it's not small caps, right? It is a mixture of mid and large caps, which is delivering for that strategy. So, and if that exposure is there, we expect it to not be very susceptible if there is any correction that happens. So we have a stable allocation. We are prepared for risk, and you have seen us do good risk management in the previous volatile period as well. So we are very confident about our allocations right now. We expect it to do well, and we are prepared for any volatility that could happen. So, and like I said, we'll be sending you out messages to you whenever we think it's the right time to top up. If you think that you want to top up right now, you can top it up, and we'll accordingly allocate. So you don't actually need to worry about it. So yeah, I think that's pretty much it is as per my
Sonam.
understanding of the market. Yeah.
Sonam, I would request if you could, just give us more time. We have a couple of more questions that have flowed in.
Yeah, yeah.
So we have a question coming from Feroz G. He says, so he has basically, asked for an assumption. What my question is on non-hedge PMS. Let's say there's a 10-15% or higher dip in the market
Hmm.
now, and in the short span of few weeks, then how much drawdown will you accept before existing and going cash?
No, so see, I think if we see a 5% correction in a short span of time, we'll move to cash. We still have gold in our strategy, right? So which will cushion any such correction. So I think depending on that the move, we will be going to cash. So we do it proactively with a 5% correction also. And like I said, we have a little bit of hedging in terms of gold also, right? So we don't actually have to buy put options. Gold also hedges the portfolio, right? So that is there.
Great, thank you. And a question from Vivek. Okay, so this is a question from Mr. Prabhu. Should we consider investing a portion of our money in fixed deposit debts or other means instead of putting all into PMS? What is your view on this?
No, no. So see, I think Shivam, you will agree that it has to be a function of somebody's asset allocation, right? That depending
That's
on
true.
your risk profile, you should have certain amount into FDs and certain amount into uh, equities, right? So let's say as per your risk profile, you can have 30% exposure to debt and 70% to equities. The equity portion, you can trust our PMS to do that. But any of your short-term needs or any of your debt allocation, you can go and book an FD or invest in your debt funds. We also have a debt PMS in our strategy. So if you said, give me some exposure to that within the PMS, we are happy to do that as well.
Great. Uh, all right. Thank you so much, Sonam, for your time. And if in case investors, if you have any further questions, we'd be happy if you keep posting your questions over here. We'd be more than happy to, take. And Vivek ji, I will take your question personally. I will speak to you. Probably I will take your number or speak to you over a call, and then I'll take your question separately. Thank you so much.
Thanks a lot, guys, and please have a good weekend. If you have voting at your location this Monday, please go out and vote. We are all planning to do the same. So,
Sure. Thank you.
thanks a lot. Thank you.